Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow. The daily stock market analysis, what we're going to do, we'll be checking the technical charts and trying to understand what happened in the market during the day, learn something from it and plan for a better trade for the day, for the next day. That's November 23rd, Thursday. It's an expiry day as well, right? So today we had a slippery banking index. Banks are falling, it was banking expiry weekly, but it was steady, solid Nifty. What does that mean? Do we have expansion from the current contraction that's going to happen soon or not? Let's analyze and see. As a quick wrap up, we'll come to that after we look at the charts. Here we go. This is the candlestick for Nifty, right? Nifty 50 charts, and the candle that you're seeing here is a hammer. A hammer on the top could be an indication of a reversal if the price moves along below the 19700, which is the law of the candle. Banknifty, we have again a hammer, that's a red bearish hammer, and again considering that this is kind of a rally or a top or a small swing highs, then it could be an indication of a reversal if the price moves below 43,200 levels, which is the law of the current candle low. Coming back to the Nifty, we can clearly see that it's in a channel, right? We actually have the Bollinger Bands, which is showing some volatility, right? And it has taken an outside of the Bollinger Bands, and then it could be forming an inside, which could mean some pullback, and then it could be moving up. This is a medium-term view, so that means that definitely the market is going to move up, but it may raise resistance because it's also at top of a channel where it has been consolidating since last 4-5 days now. Bank Nifty has already hit the top, has not even gone to the top, but met with the resistance and then pulled back substantially. But Nifty is holding on there and trying to consolidate. So there could be a pullback that can come in on the medium term basis. But we are talking about very short term. So Bollinger Bands, if you see, you can see that there is an expansion that's beginning, but basically it's contracting. The bands of the Bollinger are the daily charts are contracting. This contraction, there is sideways movement that's happening, but a small beginning of an expansion can be seen in the Nifty. Absolute consolidation, what you see on the daily charts for the Bank Nifty, absolute consolidation sideways is what we have seen, right? And today it in fact breached the 200 exponential moving average in the Bank Nifty, and then recovered and closed above that, but it lost the 20 moving average which it had yesterday. And Bollinger Bands, you can see that expansions are on the downside as well as on the upside, so anything will happen. It could be a beginning of an expansion, the upside is what it feels like, or it could take a pullback and then take a support of these gaps at 19300 or 19200 that levels, and then move up with time to take out the all-time high. That's what we could anticipate. So if we just remove the Bollinger Bands and then just look at the levels, the first immediate resistance would be to the 19878, which has got a gap resistance, and the 19900, that rounding number, that will have stiff resistance up there, and then it goes 20,000 rounding, big rounding number resistance would be there, and then after that 20,115, again a gap is there, so the resistance, and then all-time high of 20,222. Downside, good supports can be seen at 19,700 as of now, then 19,500, 650, that levels all have supports, and then 19,500 and 44 has the exponential moving average. It's also of 20, 50, 100, all these are supports. 9,300, 400, 500, all these are support zones, and then right, and we have the gap supports at 19,275 and 19,175, right? That's how it supports the downside. The Nifty resistance we already see. Bank Nifty, he already breached the 200 exponential moving average. So from the upside, the first would be to clear the 20 exponential moving average, which would be 43,664. So clearing the 43,700 is the first task, resistance, and then clearing the 44,000 second task, and then moving ahead of 42,200 and 44,400, 44,200 and 44,400 resistance upside. Then it comes to the 44,768, 44,950, 45,000. These are all clear. So 45,000 is cleared, means the previous swing high, the price action lower high pattern gets breached in Nifty, and then it can break out until 45,900 where these are the gap resistance, and then 46,400 as per the all-time high. So it's resistance upside, and downside if this 20 moving average, the previous today's low, that is at 43,200, that's on, if that is breached, then it could take it to 42,000. That would mean that it would retest the previous swing lows and further go a little more down at 41,900, 800 zones, and then it could move up. All the possibilities are there. That's a medium term view. But yeah, daily charts, this is what for tomorrow. The levels could be what I explained earlier. Our first task would be to reclaim the 44,000 and to hold and maintain the 43,000 downside. That's where the right is. That's what. Let's get back to the wrap-up view, please. So it was a positive hammer inside bar. Consolidation is there. Hammer indicates potential reversal. Hammer is red and bearish in the case of Banknifty with 0.5% lost, while Nifty was positive slightly. Intraday it was very volatile. It was V-shaped move. If you look at the intraday charts of 5 minutes, this is the kind of move that happens. Down and up, half reversal in Banknifty and full reversal of V-shaped, very difficult to trade. And so volatile V-shaped. So 200 expansion moving at 20 expansion, all that. So Nifty is solid, strong, while Banknifty is weak, bearish, volatile, consolidating. Nifty is also consolidating, right? But holding on the 97, 800 on solid, definitely. Resistances we have seen, and 920k we already seen. Resistances and supports we have seen already. The momentum is slipped, is maintained by Nifty in the bullish zones, and it's slipping sideways and falling in the case of Banknifty, same as yesterday. Flattish mix close, less than 12, 11.96 is what is happening. So that has been in this range between 12 and 10 since several months now. Consolidation, what is happening is very clear from the Bollinger Bands. We have already seen that. Technically, charts are solid, bullish, case of Nifty, and there is a divergence which is Banknifty, which is contrary. Major sectors are looking good, except the metal and the FMCG, which is not trend the bullish zones at from the momentum perspective short term. But otherwise, we have sector leaders that's driving the market. Except metal and reality, all other sectors would have close green. Major sectors we have the first most more than 7 sectors we are talking about. These indices are on the top after a big rally and has been green. It's very small red is there, but it's on the top and it's mainly in the green. That's why the market has been rallying. Nifty has been rallying because of that. The dollar is flattish, rupee also is kind of flattish, but crude is falling ahead of some open decision or something. Gold is spiking up. Overall, no major concerns immediately seen for the next day. As of now, things could change overnight. Right? So that's the view. So for investors, this could be an opportunity in case there is a reversal is happening, like we told. And traders, you have to be cautious because the trend has only been established in the Nifty, in the short term. But Banknifty is contradicting, and Banknifty is having a divergent price action movement that's happening. So we have to be extremely cautious until the direction on the position is clear. Intraday volatility is also high, although the VIX is maintaining the 12 levels. It is spiking about 12.5 and then coming down to 11.5. So it's very volatile intraday. And volatility is what I say. So position size properly if the VIX is spiking up, and expiry trades stay away, and for OTMs extremely cautious, take stop losses and cut short your price, manage your risk. That's all we can do, right? So that's a view what I have. It's basically consolidating, and unless and until the banks also move up, nothing is going to happen. Market is just consolidating, but intraday big great movements are happening with respect to derivative markets. So you have to be cautious and manage your risk properly. That's all. If you're not subscribed, subscribe and share it with friends and colleagues, and please out to maximum. Thanks for watching. Happy trading, happy learning. Bye bye.